Welcome to The Big Break Show, a podcast where we discuss short-term rentals, entrepreneurship, life, mindset, and everything in between. Here are your hosts, Rafa, Loza, and Jesse Vasquez.
What's up, everybody? Welcome to another episode of The Big Break Show. And I'm here by myself today. My buddy Jesse disappeared and we have no idea where he's at. I'm hoping he's okay. He couldn't make it to the show today and we were scheduled, so we decided to just do the recording. So today we have a very special guest for you guys, and I'm actually really excited because I've been trying to get this dude on forever. He's really busy. He's out of here of San Diego, California, and he's a boutique hotel investor. He's a multifamily investor. He does short-term rentals. He has a co-hosting, a management company. I mean, he does everything. And funny, I just found out he used to be an air traffic controller, which is awesome because they basically make all the planes fly and make sure that nobody crashes in the air. So it's a very difficult job to have, and just found out that he was a part of it. And we had a really good conversation. We talk about a little bit of high-level stuff in terms of the type of deals that he's doing, the boutique hotels that he's acquired, how he's acquiring them. And he's got a lot of good stuff going on. He's dealing with, obviously, difficulties in the industry like everybody else in terms of lending. I know a lot of you guys have heard me talk about how I had a lot of issues with our hotel up in Michigan. He's kind of running into the same issues with lending pulling out and different loan products because of what's going on in the market. So you guys are really going to enjoy this. The dude has a very successful podcast. He's huge on Instagram. He's huge on social media, and he's local. He has a great meetup out in San Diego. So I really hope you guys enjoy this. Without further ado, here is Mr. Rich Summers. Hey guys, Rafa here. A lot of you guys have been asking me if I have a course, if I teach, if I mentor my short-term rental business. And the answer is I do, actually. I just recently released my very first course. It has about 120 videos. If you're part of the monthly membership, we are adding 2 new videos a month in current issues or projects that I'm working on within the short-term rental business. And we do 1 monthly call live where you have access to me to ask me all the questions you want. So if you're interested in joining the course, or if you want any more info, click the link below. It is application only. We only open it to a certain amount of students every month because we want people who are serious, who really want to be a part of this, who actually want to take their short-term rental business and grow it, or are starting from scratch and want to learn how to actually acquire properties doing rental arbitrage. If that's you, if you're serious and you really want to do this, click the link below, schedule a call with me or my team, and we'll get you going. Now back to the show. Rich, what's up, man? Thanks so much for coming on the show. I'm really happy to have you here. I've been excited to talk to you for a while now.
Rafa, happy Friday, my man. I appreciate you having me on, and I'm looking forward to this conversation today.
Sweet, dude. Yeah, so I want you first to see if you can go into your background. I want the listeners to know who you are, what you're about, where you're located, the type of investing that you do, all that fun stuff.
Yeah, absolutely. So I have a background in sales. I was selling cars, and as I was going to college, and did really well at it. And I wanted to get into commercial real estate on the brokerage side when I got out of college, just because I love sales. And I thought, well, why not sell things that are going to pay high commissions? But I graduated school was 2008, and the entire economy was coming down at the time. And I interviewed with CB Richard Ellis and Grubb and Ellis, a couple commercial real estate brokerages at the time. And they said, hey, we love your hustle, but and we think you'd be good at it, but this is not a good time to get into the industry just because of what was going on with the economy. So I found myself on a car lot wondering, what am I going to do with my life? And I backed into a job as a air traffic controller with the federal government, with the FAA. And so I took that job, and I ended up doing it for 11 years. It was really cool. I really enjoyed it. I was like the guy, working radar scopes, talking to all the pilots, telling them where to go, climb, maintain, descend and maintain, landing them up for landing and approaches and all that sort of stuff. So it was super fun. Met a lot of really cool people in that industry. But along the way, I read the book Rich Dad, Poor Dad, and I remembered real estate and, building streams of passive income. And I thought, man, I got to get back into the real estate thing, but on the investment side. And at the time, I didn't feel like I was growing any longer within my career. So I just became obsessed, man. I started reading books. I started listening to podcasts on real estate investing. I started going to networking events and meetups. And about 7-8 months into my education process, I thought, man, I got to take action. So I cashed out my 401k and my retirement plan, and I pulled out a home equity line of credit against my condo that I was living in here in San Diego at the time. And that was my seed money to do my first couple deals. First deal was 11 unit building, multifamily in Cincinnati. It was C class. I bought it for $350,000. And then the second deal shortly after that, I partnered with two of my coworkers at the time, and we bought a 32 unit building in Indianapolis, also C class rundown. And those were my first two deals. Fixed those deals up, learned how to raise private money, started a multifamily investing podcast, and started taking down some bigger deals. And fast forward to today, control about $50 million of real estate, have a couple companies in the space, and right now we're buying boutique hotels.
All right, dude, that was a lot. Wow. Okay, so I have a few questions. Hold on a second, because air traffic controller. Okay, let's go back to the very beginning. How did you get into that? And I only asked this because my younger brother, he used to be in the military, and he was actually going to school to become an air traffic controller.
Okay.
He ended up not doing it because I guess it's like super hard, and like there's a lot of moving parts to it. Can you talk about a little bit of like why you fell into that really quick? Just really brief. I'm curious as to why you chose that and how you got into it.
Yeah, so my dad was in aviation as a kid growing up. And so he told me when I was on the car lot in '08, wondering what am I going to do with my life, he told me, hey, the FAA is hiring air traffic controllers with zero experience. And so I thought, well, why not apply? It doesn't hurt to apply. And literally like within 2 weeks, they called me and they said, hey, we want you to come up and take this test. And so I went up to Northern California. I took this written test, and I didn't even prepare or anything. And somehow I scored 100 on it. And They called me right away and they said, hey, we want to hire you. We can you come out to Oklahoma City in like 2 weeks? I was like, sure, why not? So I literally packed up a suitcase, went out there. I didn't really know what I was getting into. And you do the training out there for like 6 months. And then if you get through that, then they send you to your facility. You'll train for another couple of years. And at the time, like I didn't go into it with any pressure, but I guess looking back, there's a big washout rate. Like a lot of people don't make it. But I think because I didn't have any expectations, that I didn't really feel any pressure, and I was just kind of going in and winging it. And that's kind of how I've lived a lot of my life.
Isn't that kind of crazy how when people put so much thought behind something, they end up falling out or not following through with it because it's so big in their head, right?
Yes.
It's like this big, like, oh my God. But when you go in thinking, hey, it happens, no big deal, you usually end up following through. That happens a lot, dude. Yeah,
absolutely. I think a lot of life happens like that. And I think where I've found the most success is just by taking action, because the plan's never going to be perfect. And by taking action, you'll learn a lot more, as you go.
Yeah, I love that. Okay, so you said you were in that job for 11 years, right? Did you start in the whole real estate thing while you were in that job, or did you start like after you left that job?
Yeah, I was doing both for a while.
Okay.
I knew I wasn't going to leave that career until I had some passive income and I had built up some other streams of income on the side through real estate. And I felt like I had a good pipeline ready to go for me to leave that. So I was doing both for a while. I wasn't going out. I was literally like every hour outside of the day job, I spent studying and educating myself and networking and just meeting and talking to people, looking at deals, underwriting and that sort of thing. And then it wasn't until a couple years after to where I was able to leave the day job.
I love it. Okay. So your first deal, 11 unit building. I want to talk about that because that seems like it's a big deal, right? Especially for your very first deal. A lot of people out there, a lot of our listeners are new and they're getting into investing. And they put a lot of thought behind, and even I do it myself. You put a lot of thought behind just even one small deal, right? And a lot of people can't even break that barrier to get into that first deal. What made you be like, hey, 11 unit deal, no big deal. I want to get into it. Let's do it. Like, what was that thought process like?
Yeah. At the time I was looking at all sorts of different markets and I was looking at different types of assets, but I knew I wanted to get into multifamily. I just liked the idea that from a risk adjusted return basis, it's very low risk. People are always going to need a place to sleep. And what led me to Cincinnati was the cash flow. I felt like you could buy a higher cap rate. And I felt like at that time being my first deal, why not go into an area where there's higher cash flow and a little bit harder to screw it up, if you would. So that's kind of what led me there. But in terms of like the mindset going in, I was scared. Because all these books you read and podcasts you listen to, it all sounds great, but at the end of the day, it's all hypothetical until you actually get into a deal and see it work. And that deal, I had all the problems, right? I hired the wrong property manager. So 2 months in, I had to, pivot away from that manager, bring another one in. I had four tenants move out right after close. And so there was a lot of like learning lessons baked in there, but it was my first deal. And, fast forward 18 months later, I was able to refinance that property. I had doubled the valuation of the property in about 18 months. And then I was able to pull all of my down payment and renovation capital out of that deal, leaving me no money in the deal. And then I was able to recycle those proceeds into another deal.
That's awesome, dude. So you did that deal all by yourself?
Mm-hmm. Yes.
That's awesome. Very, very cool, dude. Congrats on that, man. That's awesome. So, okay, fast forward to today. You did all the multifamily. Your second deal was the 32 units. You said you hold, 50 million in real estate now? You're controlling 50 million? I mean, that's a big deal, right? I'm curious as to what made you get into the hospitality business, because going from multifamily to hospitality are two completely different games here, right?
It's different, but there's also a lot of similarities. I think how you underwrite these deals and how you size them up, and then how you determine the valuation, right? You got your income, you got all your expenses, and then you're left over with a net operating income, and the NOI divided by cap rate determines your valuation. So I think a lot of the principles are similar, but in terms of the differences, yes, there's a lot of differences. You're not looking at market rents, like when you go buy an apartment building, you can, pull all the similar apartment buildings within a 3 mile radius. And for the most part, you're going to be able to achieve similar rents as long as your finishes are similar to the properties that you're looking at. On the hotel side, it's a little bit different. Obviously, you have guests that are checking in and checking out, and you're looking at average nightly rates and occupancy. And also marketing plays a big factor into hotels, right? With apartments, I think marketing is important, but it's not nearly as important as it is with hotels. I think there's so many different platforms you can market your hotel on. And I found that I think what drew me to the hospitality sector really is that there's a lot of mom and pop sellers that have owned these properties for many years. A lot of them are not utilizing a lot of the OTA platforms such as Airbnb, Vrbo, and a lot of these properties are dependent on an on-site manager. And I feel like if you're buying a 15 unit boutique hotel, you don't really need an on-site manager taking up a innkeeper's suite, if you would. So we can go in and buy these properties and bring the innkeeper's suite online for additional revenue, and we can operate these properties a little bit more lean. We can operate them remotely with kind of a self-check-in, self-checkout model, and then really hit the marketing channels really heavy.
It's funny that you bring that up, because a lot of people never even, like these old mom and pop owners, never even heard of Airbnb at some point. And I'm like, it's the biggest platform out there for short-term rentals and hospitality. Well, nowadays, right? Okay, so let's talk about the transition from the actual multifamily and long-term rents to short-term. Were you doing anything in between there that made you say, hey, I want to get into the hospitality game, other than just being really good at underwriting and knowing your deals? Did you manage any other Airbnbs? Do you do any co-hosting, anything like that currently?
Yeah. So after the 32 unit deal, I bought another multifamily deal in Cincinnati, 8 units, and raised money with a couple of my partners at the time, and our co-sponsor out in North Carolina. We took down a couple larger deals with investors, 150 units out in Greensboro, North Carolina, called the Arbors, and then another one called Timber Creek Apartments, which is a 145 unit community also out in Greensboro, North Carolina. And so that kind of gave me the baseline and the knowledge on how to raise private capital. And from that, I already had my investor database. And then along the way, I backed into some short-term rental deals here in San Diego. First one was this is actually like around the time I was closing, just after I closed on that 11 unit deal and right after I closed on that 32 unit deal. All three of these kind of happened simultaneously, but I closed on a 2-bedroom, 2-bath new construction condo here in San Diego. And I just threw some furniture in there and threw it up on Airbnb. I had no idea what I was doing, and that thing was doing really well. And so I thought, why not buy another one? So went and bought another one here in San Diego, and that was a 3-bed, 2-bath house on a larger lot with an ADU in the back. So that one had 2 short-term rental listings, one for each unit, and then a third listing for guests to rent the entire thing together. So that was kind of like my experience. At the time, I just had those 3 short-term rentals, but they were doing really, really well. And after we had closed those 2 larger deals in 2021 in multifamily, cap rates started to really compress. There just seemed to be a lot of competition out there. It seemed really challenging to underwrite and find good multifamily deals to take down. And so as it became more challenging to find multifamily deals, that's when I was like, well, what about doing more short-term rentals? And so I did a 1031 exchange. We sold that 32 unit a couple years later for 3x what we bought it for. And we exchanged that property. I went in and bought a luxury home in Scottsdale. And so after that, I thought, well, I'm building out a team already to manage these properties. Why not start managing for third-party owners? So started a co-hosting business. And so with that, paired with the competitiveness in the multifamily side, led me to go buy that first boutique hotel.
Okay. Did you find any, I mean, it's a lot in there. Did you find any challenges? I'm curious only because going from like a 3-2 to like a luxury style home, and you said you picked one up in Scottsdale. Were there any challenges and differences in terms of hosting there? I find that hosts usually aren't really prepared or don't know how to deal with ultra luxury properties just because different type of guests, right? The different type of demand, the difference in nightly rates, all that stuff. Did you notice anything different when you started doing that?
Yeah. Well, luckily I have an amazing team, so they could probably answer this question a lot better than I can in terms of all that sort of stuff. But from what I gather from them, it sounds like with the luxury home, obviously you're dealing with a different type of demographic. These guests kind of they might have more questions on the front end. Yeah. They want concierge services. So we offer, private yoga instructor, private chef, private driver if they want. So there's a little bit more back and forth on the front end. But, once they get in there, they're pretty easy guests to manage. And thus far, we haven't had any issues with that property. And then obviously with the San Diego properties, I think what I've learned is the smaller properties tend to have like solo travelers or couples. And those people tend to be a younger demographic. They tend to be on the up and up in terms of technology. And they usually come and go and you never hear from them, right? But then it's the bigger properties that are traveling with larger families and that sort of thing. And you might be dealing with the primary guest that's a little bit older demographic. And so they might tend to have more questions and be a little bit more needy, if you would.
Gotcha. I'm curious. I want to talk about your team in a minute because I like to see how other people build out their team in order to be able to manage so many, especially now that you're doing boutique hotels. But did you ever convert any of your apartment complexes to short-term rentals? Any of those small unit buildings like the 11 or the 32? Did you ever add any short-term rentals in those to add extra revenue, or was it just strict long-term?
I did not. I have not done that. It's something that I have considered, but I feel like when you do that, you're exposing yourself to a lot of risk. Let's say I converted that 11-unit apartment building over to short-term rental. So now I gotta furnish all 11 units, right? So that's a sunken cost. And then it's going to take me a while just to break even to get all that money back for the furnishing and design. But, you always got to think, well, one, you're kicking out tenants, which I don't like doing. I don't believe in that. But number two, you're also exposing yourself to any change in potential regulation. And so if the regs ever do change and now you're in a position to where you got to convert these all back to long term. It just seems like a lot of work. So it's something I have considered. I would maybe do it with like a 4-plex, but I don't think I would do it with a 10 or 11 unit apartment complex.
Yeah, it's funny you say that. So I don't know if you're aware, but I do a lot of arbitrage stuff. So I've taken over 11 units, 12 units. I have like 70-something units. The biggest I've taken was 30 units. But the reason I brought that up was because I have a really good relationship with the owner of these properties. And so what we do is we negotiate a really good rate in rent, right? Obviously market rent and stuff like that. But we have run into issues and situations with regulation. So I was curious if you had run into something like that, because when regulation hits, it's a big deal, right? You have a bunch of units that you have to figure out what to do. Mm-hmm. Luckily, there's the locations where I'm at are regulated, so we don't have to deal with many problems on that end. But it does become a headache in terms of when you have to pivot back. I mean, you could always pivot into like midterm rentals, right? Or like a long-term furnished rental, but I kind of feel like you'd have to be in the right neighborhoods for that. To work out.
The midterm is a good pivot or a fallback, if you would. I do like that. I know operators that do it, and then they seem to make good money doing it. They love doing it. But for us, people send us multifamily deals all the time. They're like, hey, you could operate this like a hotel. But for me, I want the hotel zoning.
Yeah.
One, obviously, you don't have to worry about the regulations changing. But number two, the way that these properties are going to appraise when you go to refinance them out are going to be a little bit different. So if you have a multifamily property that you're operating as an STR, you're not going to get, in terms of the appraisal valuation, you're likely not going to get the same type of valuation that you would if it was a true hotel model.
Agreed. Agreed. That's one of the reasons why I now am focusing on the boutique hotel side of things as well, because the biggest one being the zoning and the evaluation part of it. Dude, I control a 12 unit building right now, and it's 10 one bedrooms and two bedrooms.
Okay.
And the owner, he did a full rehab, right? So it's like, we didn't kick anybody out or anything. So it was completely empty. I took over when the thing was being remodeled. But it's crazy. I was going over the numbers just last night, and each unit brought me in about $28,000 for the year in profit, right?
Wow. In profit. That's great.
Yeah, dude, it was nuts. And if we were able to underwrite those numbers into that building would be worth so much money, right? But he can't, because he's only bringing in like 12 grand per unit, right? So, and that's just with the rent that I pay him. You know what I mean? So an extra 28 grand per unit on top of that would just absolutely like destroy what that place would be worth. But you can't take advantage of it because nobody would underwrite it that way. Nobody would touch it.
Yeah, exactly. And I've looked into taking down some deals here in San Diego under that same model, but I went out and I did a lot of due diligence with commercial appraisers. And a lot of these appraisers said, hey, like, we're still, because it's multifamily, we're gonna still compare to other multifamily properties in the area in terms of rent comps and sales comps. And so, yes, even though you're killing the NOI and your valuation would be like 3x what a normal apartment building would be, they're like, we're not going to give you that because there's no other apartment building selling for that type of value. Now they're like, hey, if it was a hotel, then we would.
Yeah, absolutely. You know what I mean? There's lenders out there now that are kind of slowly trying to pivot to that, but it still has. I've talked to maybe 6 or 7 of the top leading ones, and they still will not even give you anywhere near what you're actually generating, even though you have. I mean, I've been in that building for two years now, and I have 2 years of solid income, and they still won't. Hey, we can't. You know, it's not. It's an apartment complex. There's nothing we can do about it. Anyway, so okay, let's pivot. I want to talk about your team. I'm very curious as to how you built your team out. Who do you have in place in terms of management for the hotels and stuff like that? Do you mind talking about that for a minute?
Yeah. So right now on the management side, we have 4 on the team. We have a operations manager, and we also have 2 VAs in full time in the Philippines. And the 2 girls here in the office, they share a lot of the roles, responsibilities from, optimizing the listings. We got pricing, we got guest communications, managing the VAs. We got vendor relations. And then all the other stuff that comes with it, the 24/7. I mean, the stuff never really stops, if you would. But that's kind of how we operate in a nutshell.
That's cool. Was it difficult for you to find and build out your team, or was it some like people you're already working with, aside from the VAs, of course?
Yeah, everyone on the team I actually knew from my existing network. And so I already knew a lot of the team members for quite some time. So actually, I've tried to hire through ZipRecruiter, Indeed, and some of these like third-party posting platforms, but didn't find much success through that avenue. And I found a lot more success hiring from within.
Very cool. Your virtual assistants, did you have a difficult time finding them, like getting good ones that would stick to like the culture of your company?
Yeah, the first couple that we hired, we ultimately had to let them go down the road. And the first couple you hire, you don't really know what to compare them to, right?
Yeah.
And so I think when we hired a third one, we're like, holy cow, this guy's like killing it. He was like he was doing more output than the other 2 combined, and it wasn't even close. And so we asked him if he had any friends that would be a good fit that wanted to come work with us. And he did. And so we hired his friend. And so now there's 2, and then we let the other 2 go. But our 2 VAs are great, and they're killing it. So the first one, his name is Marlon. He's actually an investor himself. He lives out in the Philippines, but he owns some real estate out there. The guy's like super savvy.
Awesome.
And he's just like a workaholic, and he just wants more. So I'm actually going to hop on a call with him early next week. And I'm going to see if he'd be interested in helping us source and do some underwriting.
That's awesome, dude.
Yeah.
Which leads me to my next question. What do you use your VAs for your business? Is it for like the short-term rental side of things, or is it for like the overall business of it?
So the 2 VAs that we have right now are strictly on the short-term rental side. But, if they're working a 10-hour shift, let's say, there is some downtime baked in there. And so I thought, man, Marlon's really smart with numbers. I could probably get him trained on how to underwrite, and then he could help us underwrite deals, which would be pretty cool. So I'm going to see if he's interested. It sounds like he is. And then we go from there.
That's sweet. Yeah, I have. I ask. It's funny when I first started with my VA. I didn't know any better, right? When I first started, I went to like 18
Sure.
units before I hired my first VA, and so when I hired my first VA, I kind of just expected, hey, here's the communications, thanks, right? And I just dropped it on them, and it didn't work out. Obviously, bad management on my side, and bad training, of course. And so as I learned to hire, like now we have 5 VAs, but they deal with strictly guest communications, and I have one manager VA who oversees them and hires VAs for other people and stuff like that. And she came from a referral from another host who I've known over time in the short-term rental space.
Okay.
And they weren't utilizing her to her full potential. They had her on for like 3 hours a day or something like that. And so they're like, "Yeah, I'm going to get rid of her. We don't give her full-time work. We can't really use her." So I was like, "Yeah, I'll shoot her my way." And dude, she's killed it for me. She's above it. Like without her, I don't know what I would do. Right. One of these people, it's like they're a solid part of your team now. And because of her, we've grown it. We have 5 VAs now, but they deal with strictly all guest relations and all like virtual operations for my short-term rental business. I do have a boots on the ground operations manager now that does that here, but they deal with only the locations here in Southern California. So I want to talk about some of your deals that you're doing now. I know we talked briefly a little bit prior to the recording starting here about your San Diego deal. Do you mind talking about that? I want to see what's going on with it, and because I heard your podcast, so I think it was like episode number 3 where you went into detail, and I heard it on a flight down to Michigan to go see our hotel.
Oh, nice!
And it was really good, by the way. Like for everybody listening, like they should check out your podcast. It's awesome.
Thank you, man.
And I want you to go into detail on that one.
So this is the one in San Diego that we have under contract right now. Yeah. So this deal was going super smoothly up until about a week and a half ago, and the whole thing's been turned upside down. So I'll definitely share some of the challenges that we're going through right now. But about a year and a half ago, when I was not even looking at hotels, I was only looking at multifamily, a broker relationship that I have here in San Diego was kind of like low key shopping this deal off market. And it hit my inbox. And so I wasn't interested in it, but I've lived in this neighborhood for 6 years. It's called Little Italy, San Diego. So it's a downtown pocket neighborhood here close to the water. It's got all the nicest restaurants and bars here in San Diego, and you're close to the airport and just a lot of the stuff downtown, which is really cool. So it's a neighborhood I believe in. And it's a neighborhood that's growing really quickly, and it's never going to go anywhere. So whenever I see a nice piece of real estate, I'm like, "Fuck, I gotta figure out a way to buy it." So anyhow, fast forward, this is about a year later. Now we're buying hotels, and so I thought, well, I wonder what this deal traded for. And I went on CoStar, looked it up, and I realized it did not trade. So I called the broker and I said, "Hey, man, what happened?" He said, the sellers decided to hold it, and they're going to put some money into the hotel, and they're just going to hold it for a while longer. And so I thought, well, are they still interested sellers at the right number? And he said, well, why don't you type up an expression of interest, and I'll reach out to them and see if they'd be interested. So we said, hey, we'd be interested to buy your hotel between this number and this number. What are the chances we could tour it? They said, yeah, go tour it. And it was right before they were about to start the renovation package. And so we toured it, put together an offer, went back and forth for quite some time, and finally reached a agreement of LOI, put it under LOI. And anyways, so long story short, got this deal under contract, and we got our lending lined up. We got our investors lined up. We're ready to rock and roll. We, even formed our investor LLCs. We, SEC attorneys already drawn all the docs. Like, we're ready to rock. And one of our brokers, mortgage brokers, all along, they're telling us, hey, we got this private equity guy here in San Diego, loves the deal. He's kind of a handshake type of dude, and but he's gonna come in at these terms. You can expect your term sheet here shortly. And then it just kept getting kicked down the road. Next week, and about 4 weeks into it, this is about 4 or 5 days before our $200,000 deposit's going to go non-refundable. We find out that this lender pulled out. And so at the time, I hadn't been shopping this with any other lenders because I was just banking on this one to come through. We had one other term sheet from another private equity group. I didn't love the terms. It was like lower leverage and a higher interest rate. And so I thought, holy cow, we got like 5 days until this deposit goes non-refundable. We got to put this in front of a bunch of other lenders. So I was like scrambling to get this in front of a bunch of other lenders. We got another one to come in. But it was like terms that I didn't love. And so we ended up, literally, it was last Thursday, the deposit's going to go non-refundable, and went to the broker and basically said, hey man, like this happened in the 11th hour. I don't want to cancel the contract. I think if the seller can give us 14 more days to figure this out, I think I can figure out a way to get this done. The sellers want to sell. They're like a big private equity group out of LA. They have like $1 billion of assets. And so this hotel right now is just kind of an afterthought to them. And if you tour it, if you saw it in the condition of it, you would understand that it's definitely an afterthought. They're not really putting a lot of efforts into this hotel. The reviews are really poor. It just needs some money, and it needs to be brought back to life. So all that to say, as the broker wants to get paid, the sellers want to get rid of this thing. They think that would be good buyers and operators for it. So, and we want to own it. So they're going to give us a couple more weeks. But they want, that 200K going hard, and they want some certainty of close. But if we can do that, then, they'll be willing to work with our timeline. So that's kind of in the position where I'm at. So we're pivoting to an SBA loan product, which is, small business loan backed by the government, but they'll lend on hotels. They will go up to 85% LTV, which is great. And we can get fixed debt on it. And so it'd be a way for us to get into this thing with with better lending. However, the caveat is we cannot raise the equity. And so we cannot raise from investors the equity. So this means we have to use our own money. And so I'm trying to fire sale my Scottsdale luxury property, even though I don't want to sell it. Just put that on the market, and we're trying to market that thing and find a buyer here in the next 14 days so we can, move forward with this hotel. In the meantime, I'm sourcing other capital options. I'm talking with potential partners that have the ability to come in and write one big check in case that deal doesn't sell, because the Scottsdale property, I'm not going to give it away. It just appraised last fall for 4.89.
Wow.
So I'm not going to just give this thing away, right? So we have it listed at 489. I got a number in my head that works, but I'm not going to go below that number. And so I don't know. We'll see. I think right now it's a 50-50 shot this thing sells. If it does, I'll do a 1031 exchange into this hotel. If not, then I'm going to have to get creative. But it's a deal I really want to buy, man. 24-unit boutique hotel here in Lida, Italy. 6 blocks from our office, 3 blocks from the bay. And this thing will be worth $10 or $11 million when we're done with it. Like, I don't want to let this thing go, especially living in this neighborhood. I'm going to have to drive by it every day and regret it,
Dude, yeah. And you're in San Diego, man, one of the nicest towns in all of California, So,
yeah.
There's a lot in there. And I kind of want to go into some of the details there, because a lot of people probably won't understand what we're talking about. But how did the terms change in terms of your first lender pulling out to you switching now to this SBA loan?
Yeah, so our loan to cost went down by 5%, and then our interest rate went up a couple basis points. And so it doesn't sound like much, 5% and a couple basis points, but when you plug in the numbers, it changes the return profile drastically. And it just made the return profile a little bit too skinny for my liking. And so I thought, well, there's got to be another way. And so I was like, man, well, what if we do an SBA loan? And looked at it and like, okay, cool. It makes sense, because this property is run down as it currently is. It's still doing like $860 a year, right? And so it still has enough cash flow to get the SBA loan product done. And so I thought, well, I think that sounds like the most logical solution.
Yeah, that's cool. The SBA loan, is there a reason why? Is it just like an SBA parameter where they just don't allow you to raise the equity, or is it just something for this deal specifically?
I don't know all the details of it, but I do know if you do a syndication, and let's say you use private equity or you use seller financing on the front end, and you go to refi into an SBA, if you have all these investors in a syndication, they will not allow you to refi into an SBA. And I know that you cannot raise the equity if you're going to purchase with an SBA, but I haven't looked into all the details. I should probably look into them and maybe circle back with like an SEC attorney and see exactly what you can and cannot do, because maybe there's a workaround and maybe that's the solution. I don't know.
Yeah, I ask again because for our deal, for the Michigan deal, SBA pulled out on us. And
oh, really?
Yeah, they pulled out on us the first time. And I think it's because of that, because we were raising for part of it. And I don't know. My business partner is the one that dealt. So the way we manage it for ours, just a quick background, is I'm the operating partner. So I come in and I just manage and operate. Then my other partner, he does all the construction. And then my other partner does all the managing in terms of like docs, closing, raising, all that stuff. They kind of split that between them two. Okay. So they did all of the underwriting and the raising capital part. And so when they told me that the first, so dude, we have a really similar story with this deal. Our bank pulled out 4 days before we were closing. Whoa. And we were like, oh my God, what are we going to do? Like, we were literally about to lose that. And we're like, we're not going to lose.
This is the SBA lender?
Yeah, no, this was the second lender that backed
Okay.
out. So the SBA lender was the first one.
Okay.
But they backed. So one of the reasons why they backed out was because also the first bank backed out. They couldn't. They didn't. It was a really small bank up in like Petoskey, Michigan, and that small bank, they were going to take like 6 months to underwrite the deal because they only had one person in underwriting, and we're like, dude, we can't do that. We can't wait that long. It was crazy. So we went to a second bank, and because of that, the second bank, that's when SBA pulled out because the second bank said no. So I don't know the actual details in there. I should actually ask them. But we actually went to a third lender, and 4 days before closing, they're like, hey. At the creditor table, it's just like, hey, we're not going to do it. And no idea why they didn't give us an actual reason. So we were left scrambling. Luckily, we ended up closing it. We found a lender that pulled through, raised the money we needed and stuff like that. But I don't know. I actually don't know the actual details, to be honest with you, as to why SBA pulled out. That's why I was asking. Maybe it was one of those reasons.
Yeah, that's crazy, man. So how did you guys end up getting that one done with the lender pulling out 4 days before closing?
Dude, so we renegotiated with the owners. We tried to get seller financing. They would not budge. They would not budge on seller financing at all. So we ended up finding a new lender, and it was kind of like, I don't want to say a scuffle, but it was kind of like between the owners. They're like, hey, we're going to take your earnest money. We're just going to end this deal. And we're like, listen, we're doing everything possible to close on this. You guys are the ones that are now blocking us from actually making this happen. And so we're like, we're not just going to let it go that way. Like, give us an extra 2 weeks to figure this out. We have someone in line. We were already shopping it, right? So we had other lenders already lined up that are saying they were going to be able to close it. We just needed more time. And so we ended up putting more money in for earnest money so they can give us a little bit extra time. And we ended up doing it 2 weeks later with a different lender.
Nice.
So it worked out. But the owners are cool people, really nice people. I think it was a family member who was in their ear, kind of, hey, don't do this, don't do that. That was kind of stopping them. I don't know. We can only speculate, but we've met some of them, and we think that's what it was.
What was the loan product that you guys ultimately ended up closing with?
It was just it was a long-term loan for it. Long-term. We ended up, so we got, I think the loan was like 1.9 or something like that, and we raised the difference.
Okay.
Honestly, to be honest with you, I don't know the exact product because I only do the managing stuff of it.
Yeah.
They've told me, but I don't remember.
Yeah.
I should ask them, really get you on the phone with them so you guys can talk about it. But they have all the details for it. I just know the numbers. I did a second underwrite, so made sure that since I'm managing, I got to make sure I know the rates to make sure I'm bringing in the right amount of money in.
Sure.
But I don't know. I know it's a long-term 30-year loan product that we got.
Got it. Very cool, man.
Yeah. So I want to talk about the way you're structuring this, because I know you said something about how you guys were going to do more of like room sharing. Is this the same deal, the San Diego deal? Because that's unique to me, and it caught my attention. It's also one of the reasons why I really wanted to talk to you about it, because number one, the deal's awesome. Number two, you're in a great location. But number three, you don't really hear a lot of people converting these type of hotel deals into like a hostel style hotel deal, or managing managing it this way to where you're doing renting per bed rather than per room. So what made you come up with that idea, number one, and how does that look in terms of, because I mean, I don't want to keep going into the long questions here, but I mean, it's like managing a day-to-day is already steroids management, but now doing beds, like that's like crazy now, right? You're like up here now. So what made you get into that and want to actually do it that way?
So this hotel currently has 2 of the 24 rooms with 6 bunks in each of those 2 rooms. And so we had 36 months trailing financials for all the rooms. And those 2 rooms with the 6 bunks were grossing almost 3x what the standard rooms were grossing in terms of RevPAR. And so we thought, okay, well, what if we did more of these? And we did play with the business model a little bit. We're like, hey, what's the highest and best use? And we thought, okay, well, if we go all in on this model, we could gross a lot more with this hotel. We went around and toured a bunch of local hostels, and we thought, okay, we can do it. And that was part of our business plan that we were kind of thinking along the way. But, since then we've tweaked it. And the model that we're going to do is we're just going to keep those 2 rooms because it's a 3-floor hotel. There's 2 main floors, and then the bottom floor just has those 2 rooms, and those happen to be large rooms. They have kitchens, multiple bathrooms, and so what we're going to do with those 2 units downstairs is we're actually going to rip up the kitchens. We're like, we don't need kitchens in these rooms, especially if we're going to put a bunch of bunks in them. We don't need people cooking, right? And so we're gonna convert it from just the 6 and 6. A total of 12 bunks. We're going to end up actually putting in built-ins. We're going to go 3 high, and we're going to put 21 beds in there. And so those will be our 2 bunk rooms. We'll have 21 there. And then the rest of the hotel, the other 2 floors, we're just going to renovate those rooms. We're going to put in all new stuff, new design, new furnishings, and we're going to operate those as standard hotel rooms. So we'll still be able to call it a hotel. But I think the main thing here is, like you alluded to, not a lot of people are doing the hostel model. And so you got to think, when we go to refinance or we go to sell the property, what is this going to look like to the new buyer? What is the debt going to look like? And it really will hinder your ability to go secure good debt if you're running the hostel model, because it's just not a mainstream model here in the States. So we thought, why don't we just continue to do it this way? And we can call it a hotel. And we'll still have a lot more financing of options. And then when we go to sell one day, it will be more appealing to a bigger buyer pool. So that's our latest model.
Gotcha. Yeah, that was you answered it. That was going to be my next question. How was it going to affect? Because it's crazy the way you would have to structure that and the way it would have to get set up in order to actually get lending, especially if you're trying to go like conventional, right? Nobody would ever give you something like that. You'd probably have to get some kind of private lender or something.
That, and then the operations would be a lot more hands-on. We would have to have a front desk person there pretty much like 24/7. We were going to have 144 beds in that thing, which is a lot. But now kind of pivoting back to our standard model, the payroll will be reduced and there will be a little bit less pushing and pulling in terms of the operation side.
Yeah, I've seen people who've done the bed model and they bring in a ridiculous amount of revenue, but it ends up being the same as a regular hotel model because they have to have staff on site. So it ends up killing half of that profit anyway. So they end up pretty much around the same amount of revenue that comes in or profit that comes in at the end of the year. So cool, dude. I'm excited, man. I hope you guys work that deal out. I mean, I'll definitely drive down there. I'm not that far from you. I know I want to talk about your meetups too, because I've talked about wanting to go up there to your yacht meetup and stuff. I think that's awesome. I'm actually going down there April 30th. Jesse's actually hosting a midterm rental convention in San Diego. So it's going to be a 2-day convention. Dude, you should go to that. It'd be fun to go there and do some networking. I'm going to speak at that event. We're hosting he's hosting it. I'm just speaking at it. But it's a midterm rental summit just to talk about midterm rental stuff. I'm going to talk about arbitrage with midterm rentals. But if you're doing something, I'll definitely come by and check everything out.
I'd be interested, man. That sounds fun.
Cool. The deal you did up north, that's the podcast that I heard the first time I heard your podcast. And I think I saw you because I think you posted something with Tony, which is how I found you and stuff like that too. How did that deal work out? Because you said something super important and a lot of people don't pick up, where you said you talked to the surrounding management. And a lot of people never want to talk to anybody else because it's kind of like, hey, we're stepping in and buying this like mom and pop shop that's been in this town for years. And they kind of feel like you're disrupting neighborhoods or doing something different that's going to mess them up. Have you ever felt that way? Because I know in that podcast too, and I know I'm bringing up a lot of stuff from this one podcast because I've heard it and I really enjoyed it. But you talked to the surrounding managers to get info for your deal. Like, were they open to just give you information out like that? Or was it something that was kind of like you received pushback from them?
Yeah, the hotel next door, the innkeeper, while we were up there visiting that hotel, and this is for your listener, this is the first hotel that I acquired up in Northern California, but it's in a rural area. It's beachfront, but it's in Humboldt County, and there's a lot of good hiking and black sand beaches up there, but it's a little bit more rural of an area. And so when we actually went to go visit the hotel, they had, it was a Monday night, I remember, and I think it was late spring. It was early summer on a Monday night, and they had they had one of the 10 rooms occupied, so only 10% occupancy. And
wow.
Which is great. I mean, we wanted to stay in one of the rooms, so that worked out in that regard. But we're like, holy cow, are we going to be able to make this business model work? And so we went to some of the surrounding hotels, and the one directly next door was also 10 units. And we just went and approached the innkeeper. And I said, hey, how you doing? And we're just completely honest with what we're doing. We told her we're up here looking at potentially buying this hotel, but we're trying to gather some more information in terms of what the surrounding hotels are doing in terms of like revenue and occupancy. And so what are the chances you might be able to help us out? And she said, I'd love to. Why don't you come in the office? And so literally within striking up a short conversation. We were in an office. She was showing us some stuff. And she said, why don't you guys come back later tonight after dinner? We can have a couple, glasses of wine, and I'll show you guys more stuff. And so we had dinner, went back to the innkeeper next door. We brought some wine for her. And literally, like, we conversated for a couple hours, and she showed us everything, all her books, everything. And so what we've discovered was the hotel we were buying never was able to crack $200,000 a year in gross revenue. the entire time this owner had owned it.
Wow.
And not only did he have managers on site, the innkeeper next door at the hotel next door, she said the managers at the hotel that you're looking to buy are stealing from the owner, and they go and take day jobs at other parts of the town instead of working on the hotel. They will block off dates before and after any guests check in or check out because they don't want to do same day turns.
Unbelievable.
And then the hotel we were buying was doing less than 200 a year. The hotel directly next door, and granted, the hotel next door was smaller units. And in terms of like a renovation package, ours was going to be much nicer. Was doing almost $800,000 a year, and they weren't even on Airbnb or Vrbo. And I thought, holy cow! If they can do that, we can do that as well. And that's what ultimately gave us the confidence to move forward on that one.
That's awesome, dude. That's such a good tip for people listening to it, because I honestly never, until I heard your podcast, I never thought about talking to surrounding managers. I mean, it's just because I guess it's a preset notion in my head where it's like, oh, people are going to push you back and not want to give you information, right? It's one of those things where like people aren't really willing to be open about it. It's kind of cool that you did that. I saw you post something on social media the other day. Is that the hotel that just got completed and remodeled? Or how long ago did you guys finish that?
It is. So we just completed the renovation not too long ago, and we just launched it about 3 or 4 weeks ago. And yeah, I mean, we did a good job with the renovation. I used a contractor group that did my Scottsdale property. They're based out of Phoenix. But right now, as you know, with the interest rate environment, contractors are they're hurting for work right now. And so he's like, hey, man, wherever you got hotel projects anywhere in the country, I'll fly out and do the renovations. So they flew their crew out to Northern California, and they knocked out that job in literally 7 weeks, start to finish. And that was a full renovation, all 10 units inside and outside.
Very cool. Yeah, our contractor out in Michigan flew his people up from Mexico. They were down there doing a job, and they came up and like, hey, well, they're staying there right now. They're doing 6 units at a time. So they just finished the first 4, I think.
Are you guys still hosting guests while you're doing the renovations? You are.
So we're hosting. So the way we did it is we are doing the left side of the hotel block, plus a 3-bedroom and that studio, so the lodge area, and then we're only hosting on the right side, and we're leaving one vacant in the middle just to provide the space for them to be able to move and for the noise, because. The first day when we started, the contractor just showed up and started demoing everything, and I got complaints across everybody. And I'm like, sorry guys, I didn't know that because they came a day early and they just started going to town on it. And we got a bunch of complaints, so I ended up moving everybody to the side. But we're hosting half of it, and then we're renovating half of it because we need the revenue to keep coming in still. Because we still got to pay the mortgage, right? The mortgage got to get paid, so we need revenue coming in. Now that your deal up north, that one it's already stabilized. Well, I guess it's not completely rehabbed. What kind of loan product did you get? Is it conventional? Did you have to do a bridge loan? What did you have to do for that?
Yeah, so we got seller financing.
Oh, nice.
The seller financed 70% at 6% interest only, and that was a 5-year term. And the coolest part about the seller finance is when we go to refinance the deal, hopefully later this year, that seller, when we pay him back, he's going to see what we did to his hotel that he was not able to achieve over the 20 years that he owned it. And he's retired. He's going to give that money right back to me for the next project. He's going to become, my biggest investor at that point.
Very cool. That's cool, dude. When you raise private, I want to talk a little bit briefly about private capital. I want to shift kind of away from this and how you do it to raise money, because a lot of people don't know that you can actually raise money for deals. And there's different ways to structure it, right? I've raised money even just for some of my arbitrage deals, just to get furniture set up, right? So it's one of the biggest questions I always get. Hey, how do I get people to want to give me money to invest, right, in my deals? What do you offer one of your like limited partners on one of your big either multifamily or now your boutique hotels if you were to offer somebody and you needed to raise a portion of the funds?
Yeah. In terms of like how we would structure the investors.
Yeah.
So it just depends. I mean, I've done a few now, and like with the larger apartments, we did a 75-25 GP LP split. One of them we did a 7% preferred return. The other one we did an 8% preferred return. And for your listener, that just basically means the first 7% of all the cash flow is going to go to the investors before the general partners get paid. And then with the latest deal that we closed up north, the hotel deal, we actually just brought the investors in the form of debt. We didn't give them any equity. And so we just created a investor LLC that lent to the hotel LLC a promissory note, personally guaranteed by us. And we actually paid them 20% fixed return, paid monthly.
Oh.
And we'll go ahead and pay them back when we go to refinance the deal with the refinance proceeds. And people ask, well, why would you pay them a 20% fixed return? That's really nice. And the investors actually really like that model, even though they don't have equity, is simply because, with these longer syndications that are 5 to 7 year holds, yes, you're going to pay 6, 7, 8% cash flow, and then you're going to pay the rest of it when you go to sell or refinance the deal. But annualized, when you break down the 5 to 7 year hold period, annualized, you're looking at 18, 20% a year. Right. So if you hold this asset and you have investors for 7 years before you sell and you're paying them 18, 20% annualized, that's 140% cost of capital to bring those investors in. And under this debt model, even though we do pay 20% with the last one, even if it takes us 2 years to refinance them out, we're going to pay 40% to borrow that money versus 140%. It's much cheaper. And then we get to own 100% day one without using our money.
That's cool, dude. I've never heard anybody do it that way, especially at 20%. Do you find that your investors are really excited about it and want to come back to you because of that model? And will you continue using that same model for future deals?
Yeah, we didn't know how it was going to go. We didn't know how the investors were going to like it, but we opened it up and it filled up. It completely filled up, fully subscribed in less than 24 hours. There was a bunch of people that couldn't get in that wanted to. And so, yes, we will do this model more. It's going to be deal by deal, right? Yeah. So some deals we might not be able to do 20. Maybe we'll do 16 or maybe it's 18. But there's also a way to do it so we can pass through some tax benefits. So we're looking into that as well. So maybe we do something like 16% with some tax benefits. I think that would be pretty appealing for an investor.
That's cool. We're doing kind of like a share model where we do shares at a certain amount. So for example, one share like at 100 grand, 8% preferred, but they get a certain percentage of equity because we want those investors to keep coming back for future deals. And when we sell, they get, 4%, which is quite a lot over time, but it's cool because as we're new, right? We're just starting off. Sure. So I like the 20% deal a lot. That's cool, man. So I gotta, what do you got going on coming up now? We're getting to the top of the hour. I kind of want to talk about a little bit of what you have going forward. I wanted to talk a lot more about the way you guys manage your short-term rentals and stuff like that and how you had your team. I really like the fact that you have it structured where you're like, hey, you just overseeing everything, right? You're putting people in place, and that's something that a lot of people have a difficult time doing. They have difficulty trying to put people in place because they don't want to relinquish that control, right? They feel like they need to be involved in every day-to-day aspect. So going forward, I'm getting into two different topics here. I get excited when I talk about this stuff. Going forward right now, let me ask you this. What do you have going on going forward aside from this San Diego deal? Are you constantly looking for stuff? Are you trying to expand? Like, what is it that you're trying to do?
Yeah, right now it's pretty simple. So we are looking for boutique hotels to acquire. And we are looking to grow our management portfolio. So we have a couple referral programs out there right now. So anyone that brings us an off-market boutique hotel that we close on between 2 and 10 million, we will actually cut them a check for $50,000 at closing.
Awesome.
As a referral fee just for bringing that deal to us. And then we have another referral program, and this is for to grow our management company. We're looking to bring on more luxury short-term rentals and boutique hotels. But if someone refers us, someone that we end up managing for, we'll give them $1,000 referral fee.
Sweet. That's actually really cool and extremely smart, by the way, because there's a lot of people out there. Dude, I get referrals all the time on Instagram, and I end up passing them up. I'm going to start throwing them your way because I don't like to manage. Like, I don't do co-hosting because I don't like to manage for other people in different locations unless I have a team built. I'm going to start shooting some your way, which leads me to the second part of what I was trying to ask you. In terms of your team and managing these things, like, how do you build teams like boots on the ground everywhere you go? Or is it just you have like a cleaner who overlooks everything? Because I'm assuming your operation manager would have to handle, let's say you pick up something in, I don't know, Wisconsin. It's a high-end luxury property, if there is anything out there that's high-end luxury, but where it's a multi-million-dollar property, I would assume you need to build a team there, correct?
Yeah. So any market that you're in, you're going to need two things in terms of boots on the ground. You're going to need housekeeping and you're going to need good maintenance. If you can find those two things, everything else can be operated remotely. in terms of guest communication, calendar management, pricing, all that sort of stuff, et cetera, that can all be handled remotely. But some of these properties, a lot of the short-term rentals, obviously, we pay cleaners on a per clean basis. And, for the boutique hotel, the 10 unit that we just alluded to on the beach, that one we actually have 2 full-time cleaners that are on payroll. And so we can utilize them to do other things for us because we're managing remotely. So if we needed something, for example, like a supply ran to one of the units or something like that, they can go run that errand for us and do it. So that's kind of how we get around it.
Yeah, that's cool. One of the difficult things that I find in my remote locations is that when we need somebody to, what I call a runner, somebody to go out and deal with that little small thing that got busted, right? Maintenance guys usually will, let's say, towel rack broke or something like that, or blenders and stuff like that's easy. You can get delivered with Target or like Amazon, and the guest obviously has to wait. But the difficult part of it is dealing with specifics. I don't know, like a door hinge is broken, the door lock isn't working, and the backup code is busted or something. Having that person to go out and deal with that, like in the middle of the night, is where you find difficulty. I was curious as to how you guys do it as well. What markets are you in? Are you any outside of San Diego where you're doing short-term rentals, or do you only look in like the Southern California area? Yeah,
so currently we're managing in 9 markets around the country. We're in St. Augustine, Florida, Indianapolis, Kansas City, Memphis, Tennessee, Joshua Tree, Scottsdale, Northern California. We're in Oregon as well, and San Diego, of course. I'm probably missing 1 or 2.
Nice, man. That's cool. Yeah, I actually have some in Kansas City. I have 6 units out there.
Okay.
Yeah,
nice.
So that's cool. Yeah, dude. Okay, so we're getting to the top of the hour. I want to ask you the 2 questions we always ask everybody that comes on. Being that this is the Big Break Show, I want to know, like, is there a defining moment that was your big break to get you to where you're at now, from going from an air traffic controller to today, or even prior to an air traffic controller? Is there something that comes to mind that you can share with the audience?
Yeah, I would say there's been a couple, but I think the first one was obviously when I was, working the air traffic control job, and I just kind of felt like I was no longer growing. And at the time, I didn't realize this, but like what makes me happy is continual growth and progress, right? Happiness stems from growth and progress. And I didn't know it at the time, but I knew I wasn't growing and I knew I needed more. And so that's when I started learning about real estate investing. And I thought, man, I really want to get into this. And at the time I was just kind of thinking I would do it as a side hustle. I never thought it would become my main thing and I would ever leave that career field. But that was number one. But I would say most recently, was when I decided to break off from my partners and kind of go on and do my own thing. I think that was about 5-6 months ago. But I've grown and learned more in those 5 or 6 months than I ever did any of the years I was investing in real estate prior to this.
Very cool. Let me ask you a quick question before we get to the second part here. When you split up from your partners, I guess, but prior to that, did you guys have like defining roles of what all of you guys did within your partnership? Mm-hmm. Can we just really brief on how that looked for you?
Yeah. So one of them, Sean, and by the way, just for your listeners, like these great dudes, we still own assets together. We're friends, and I would trust them with my kids if I had kids. They're great guys. But Sean would do a lot of the underwriting. And he would do a lot of the renovation management in terms of like construction and that sort of thing. And then Mike would do a lot of he would work side by side with our CPA, legal, and he would do some asset management as well. And then I was more like acquisitions, like finding deals, sourcing deals, and then capital raising.
Very cool. Yeah, I like that. And then now that you're on your own, are you like the guy that wears all the hats now, or did you put people in place to fill those roles?
We have an amazing team, and they do a lot of the cool stuff that makes our business go. Yeah, so everything is pretty much delegated out, from asset management to investor relations to administrative stuff to operations and that sort of thing, which allows me to focus on doing content like this and recording podcasts and figuring out ways to grow the business.
Yeah, I love that, dude. I only bring that up because I keep bringing up the team thing, because I know you have a really good team, right? Where
amazing
you have
team.
People that you trust in good places to do what needs to get done, and you trust them to get it done, right? You don't have to do all the work yourself. Cool, man. I appreciate you sharing that. Okay, so is there anything that you can give the listeners right now where they can take action immediately, right? Learn and apply. So one tip, a trick, something that you can say, hey, after this episode, go do this to start doing this.
Yeah. I actually just did a podcast episode recently on like what I would do if I was starting all over from zero, knowing what I know right now. And the three things are, one, I would go find investors, and I would ask those investors what kind of deals they're looking for. And I would go find them deals, and I would take an assignment fee for us finding them deals. Right. So that's one way that you can make a return, without having to spend too much time or even having the ability to buy the real estate. You can just go find the deals and assign them. Number two was I would start a co-hosting business, and you can basically just go manage other people's short-term rentals and take a commission split of all the gross revenue that comes in monthly. You don't have to own the real estate. You don't have to spend a lot of upfront costs. It's free to start a co-hosting business. It does not cost that much money. And then number three is, and this is going to take a little bit more work, but this is, I think, probably the biggest lever, is go put deals together. I would go find value add commercial real estate deals, and I would partner with people that have money but no time, because you as the operator or your listener has time but no money. And I would go and buy these deals, and I would bring in those investors. And this would be a good way to obviously own and create equity without having to use your own money.
I love that, dude. Those are so good. Yeah. Sweet, man. So, Rich, man, thank you for coming on, dude. I'm sorry. I don't know what happened to Jesse. He just disappeared on us. I'm sorry he couldn't be here. But we still had a really good conversation. So I really do appreciate you making the time to come on. Where can people find you? Where can they get a hold of you? All that fun stuff.
Yeah, so I'm very active on social media. My Instagram handle is rich_Summers. That's SOMERS. If you want to learn more about investing in boutique hotels, you can check us out at summerscapital.com. And if you're interested in any sort of property management, boutique hotel management, or short-term rental management, you can check us out at ExcelsiorStays.com. And then lastly, if you want to learn more, I got a new podcast called The Rich Summers Report.
Sweet, man. Thank you. And throw in your meetup as well, because a lot of our listeners are in Southern California.
Yeah, absolutely. So we host a monthly meetup here in downtown San Diego. It's rooftop. We got bay views, city views. It's really cool. It's the second Wednesday of every month. It's called Beers and Deals here in San Diego. And then in the warmer months of the summer, we're going to probably start it back up in May. We'll start our monthly yacht meetup up as well. And that one is called Cash Flow and Cocktails. You can learn more just by shooting me a follow on Instagram. I'm usually pretty active about posting about those events.
Cool, brother. Well, thanks a lot for coming on, man. Yeah, we'll stay connected, stay in touch, and hope to see you here again in the future, see what you got going on.
Yeah, man, you're right up the road. So definitely looking forward to connecting with you and learning more about what you're doing.
Appreciate it, dude.